Hi everyone and welcome to another video from the Motley Fool. I'm Owen Benelak and I'm going to talk to you today about Apple. You know about Apple, it looks a cheap company. But you're wrong, Apple doesn't look cheap. I'm going to say today that Apple is cheap. Quite controversial, but that's what I'm going to say, and I'm going to highlight three different measures by which Apple is cheap. Firstly, it has $135 billion in cash and investments. Bear in mind that this company is valued by the market at $430 billion. It's got no debt. So you can net that off straight away, and you're looking at a $300 billion company. Now, it can't get all that cash. Lots of that cash is held offshore. It would be taxed. It's fair enough to put a discount on it. The fact is it has that cash. It will eventually come back to shareholders, and it gives the company an enormous war chest, and I think brings down all valuations. Apple doesn't need $135 billion. It doesn't really need $35 billion, but let's say it does. You know, it wants to keep that. That's $100 billion that it can do something good with. Secondly, it's throwing off loads of cash. It's throwing off, say, $40 billion in cash a year after all its various operating expenses. So you would basically get your money back. If you were to buy Apple today, if you could swoop in and buy the whole company, you'd get the cash, and then you'd get back from the cash flow, assuming the cash flow was stayed at this level, doesn't grow, in about 6 or 7 years. After that, all future earnings will just be completely pure profit to you. And the third reason I think that Apple is cheap is because both of those measures assume that nothing really good happens. Now, you can argue that bad things are going to happen. The margins are probably going to come down. I don't even know that that's absolutely and utterly nailed on, like people tend to say. The fact is, Apple is still selling lots of products. It is still commanding premium prices. And whilst margins did fall last year, it also introduced a whole load of new products. Each time it does that, it has to invent the new product, has to tool up via its third parties those lines. Those things compress prices, but later on, compress margins. But later on, it becomes more cash generative because you've already know how to make an iPhone 4, say. But in future, there's lots of good things that can happen. Apple could release a TV product. Apple could release into the emerging markets some kind of cheaper phone. It doesn't even have to be a new phone. It might likely be a more simplified version of the phones that they sell now, but probably internally simplified. So it's probably not going to mean Apple needs to go down market. And thirdly, Apple has done that anyway with iPod and various other things. Apple likes to cannibalize its own sales. So basically, it's cheap, lots of margin of safety in the cash flow, and good things can happen. This is still a good company.